Hey guys, just want to send you a quick video about not just what's going on in the markets today, but really what's been going on over the last 5 to 7 days or so. So you probably, if you've been watching your accounts, have been moving around a lot. Volatility has returned, and I want to send out a quick message talking about some of the fundamentals that are going on right now that are leading to that. So first of all, if you've been watching interest rates have spiked pretty significantly in the last, like I said, 5 to 7 days. Now, the markets are kind of like us, right? They don't like things change and they like things to stay the same, but really we are in an increasing interest rate environment, and what you find as interest rates start to increase is they do cause volatility in the market, because what starts to happen is people start to wonder, well, wait a second, interest rates are going up. Should I start to take some of my money out of the markets, put it into some treasuries that are going up? Eventually money market and savings accounts should start to go up as well, but they are coming from a very low base, so there's still not a whole lot of return in those sorts of accounts. But that's what happens here. With interest rates start to move, it starts to cause a volatility. But the second thing I want to talk about is that this is actually normal, right? This is normal for the stock market. We've kind of forgotten that really a little bit, because for the last probably about 12 months or so, we haven't had a whole lot of volatility. This is the most volatile the markets have been since the beginning of 2016. So we haven't seen anything moving like this for really about 2 years or so. Now, what I always tell you, right, is let's not get scared about what's happening in the markets. Let's not get scared about what's moving around there. Let's look at fundamentals again, okay? So interest rates are starting to move up. That doesn't mean the market will become unraveled, right, and everything's just going to collapse. It doesn't mean that. This has happened in the past. We're coming off a very low base, and we've been at a low base in interest rates for a long time. So of course, as that starts to move up, it's going to cause a little bit of volatility. But look at the fundamentals. Jobs are still strong. The tax rates that got cut really haven't even come through into the markets. So we're still looking at that to provide underlying strength to the stock market and your investments as well. So I've actually been doing some buying for a lot of our accounts this morning. We look at this as opportunities, right? I put out a post a little while ago earlier in the week saying that danger and opportunity are just two sides of the same coin. And of course, I stand by that, and that's why we've been doing some buying for our client accounts. I even did some buying for my personal account this morning as soon as I got to the office. So I just want to touch base with you all, let you know that we're staying on top of this, looking at what's happening, but this is normal, right? This is what happens in the markets. And we want to really just stay with the fundamentals and with those figures. If anything is concerning you about your accounts, or you just have some other questions you want to touch base on, make sure you give us a call at the office here at 210-428-6250. We'd be happy to speak with you.